The moment you've all been waiting for, the great brawl, if you would, of China. On the one side, we have China's earliest and perhaps strongest believer, Yale professor and former Morgan Stanley economist Stephen Roach. And on the other side, another legend for you, famed short seller Jim Chanos, who has been betting against China and its stock market for years. They are joining me right now to settle the score once and for all and help you understand this complex and controversial economy from all angles. We want to welcome Stephen and Jim to Street Smart. So great to have both you here. Let's start with Steve. I'd like you to make the case for why investors should believe in China right now.
First of all, we're not going to settle this, Trish, because
if
we do, what are Jim and I going to be doing for the next several years? So, this is just
years, right?
All right, this is a preview. This is a preview.
Yeah, I mean, this is just another rumble in the jungle. Look, Jim's had a great call on the markets, but he's had a lousy call on the economy. I'm not a market guy, so I leave that to Jim. The Chinese economy has gone through several of these hard landing scares and just survived another one. It's reaccelerating again. China is, I still think, in the early stages of its development story. It's going to make a major tweak right now and shift the model away from relying too much on exports and investment to one that derives greater support from internal private consumption. And it'll be the greatest consumption story the world has ever seen. And shame on us in the United States. We need a new source of growth if we can't take advantage of that. So I think there's plenty more to come.
You say you're betting on the economic fundamentals, but a lot of people are questioning those economic fundamentals. Recent GDP data, for example.
Yeah, well, I would first echo what my friend and colleague Steve Roach is saying. He has been right on the economy, but we've been right on the markets, and thank God that my clients and I get paid on the markets and not the economy. Having said that, look, I think there's a lot to question. We question U.S. data. It gets revised all the time. And I think that there's a lot to be said about the nature of how data is collected in China. But beyond that, I'd get back to the model that Steve referenced. And the model is, I think, unsustainable. It's a model based on increased fixed investment. And despite what the China supporters would have you believe, consumption is still dropping as a percent of the Chinese economy. It will one day grow. It has to, ultimately. But I think the transition period, what we've been saying is that transition period from an investment-driven economy where you drive GDP at the local level and at the
infrastructure being the old way they've grown versus an emerging middle class being the newer. You're saying that transition isn't happening.
It's still, in fact, the reason the Chinese economy accelerated, if it did, is because they just accelerated and pulled forward a lot of projects that were in the 5-year plan and sped up and increased the debt incurred to finance those projects. And that's a crucial point. They're borrowing lots of money and more for every dollar of GDP growth. And that is ultimately unsustainable.
What do you say? I mean, if they've got to go somehow,
Trish,
right?
I'm an American. Debt is great.
Hey, debt.
Look what it's done. Look what it's done for us.
Oh, we got a lot of it. We got a lot of
it. Jim and I, we've had this debate a number of times, and we get stuck a lot on this infrastructure investment story, and I think that's one of the big differences between us. The urban share of the Chinese population in 1980 was less than 20%. Today it's 52, probably headed up to about 70% by 2030. And when you do urbanization, the scale they're doing, 15 to 20 million people a year moving from the countryside to the cities, you got to build. And urbanization is a infrastructure, construction-intensive activity. Now, you don't want to, Jim is fond of, the ghost cities in Inner Mongolia and places like that. But I've seen a lot of ghost cities in China. Believe me, the first one I went to was Shanghai Pudong in the mid-1990s. They fill them up. There are 5.5 million people living there. And today's ghost cities, most of them will be filled. Some of them maybe won't be. But,
although
when you're building hundreds of cities, if you make a mistake.
Steve, these are some shots that I took in Kimbashi, which is in Inner Mongolia. You've probably been up there. A city that can accommodate 1.2 million, and there are 28,000 people living there.
Whoa.
And the key is...
Just think of the upside of growth there.
Yeah, that's right. Let's go long a condo.
And Steve,
but look at how empty it is.
And comparing Pudong, Shanghai Pudong, its growth within the growth of the major financial capital of China is like saying, well, look at Lower Manhattan and look at the Upper East Side of Manhattan. You looked at that in 2007, you would have never seen a problem in the rest of the country, in Florida and Vegas and elsewhere. That's a little misleading. Number two, be careful on your 15 to 20 million annually moving to the cities. What a lot of that is, Steve, is actually the cities expanding out and capturing the people that are already there. They're not moving. And that's something I think that is underappreciated, that as urban areas grow out, more and more ring roads in each city, what were considered rural are now urban.
So how does that change the urbanization equation?
Yeah, and finally, the people that do move, basically the migrant workers in search of work, interestingly enough, often now in construction, so there's a bit of a tautology there, cannot afford what's being built. They can't afford the condos to shop at the retail malls. Maybe ultimately in 10 years they will, but right now they can't. So a lot of what's being built, for example, condos, is being purchased by the top 1 or 2% of the Chinese economy. It's not being purchased by the migrant worker moving into the city looking for work.
What's happening to this middle class that's trying to grow and grow and grow?
It's expanding, and there are issues in terms of affordable housing, and Jim is right about that. But I think the high-level condos in the first-tier cities are really not the shelter that's intended for the rural-urban migration. The government's got a very aggressive so-called social housing program underway to deal with the newly migrated urban workers. Still, there are problems with the benefits, the access to social welfare that migrant workers have. They're not portable, and I look for the new Chinese leadership to address that. This is the so-called Hukao residential permit system. It's antiquated and needs to be brought up to speed. So, look, there's a lot of,
they got a lot of moving pieces.
But they've made enormous progress in 32 years.
Let's talk about it as an investor. You're going into a place that's obviously very different, culturally, language, etc., history, obviously incredibly different. Some of those differences have to do with the transparency or lack thereof in the markets. Right. How much of that is one of your big focuses? Well,
I think it's the big focus because if you look at the Chinese economy, Trish, over the past 10 years, it has quadrupled in nominal terms. The nominal GDP is up fourfold. That's about a 13%, 14% nominal GDP growth per annum. The Chinese stock market over that same period is up 40% or 3%, 2-3% per annum. And the reason for that is that there is a lot of what we call agency risk in China. That is, the economic growth that Steve rightly points to does not basically trickle down to the investor. That because of both corruption, there's all kinds of friction in the economy.
And the markets are closed. There's an internal market. The A shares is only open to Chinese investors.
Well,
that's part of the issue as well.
That's not totally true, but it was back then. But in any case, what we're seeing is that it doesn't accrue certainly to Western investors. And that's one of the ways in which I think Steve and I talk past each other a little bit, in that you can have economic growth under this state-directed capitalist model and not have it accrue to the capitalists.
So eventually, fast forward for me, can you ever really have true economic growth and prosperity for the nation without a real democracy? In other words, can pure capitalism work without democracy? Kind of a philosophical question.
It's a very deep philosophical
you've got the corruption, you've got all these
question.
things.
We are the quintessential democracy. The last time I checked, we've had 5 pretty crummy years of economic activity in the U.S. So we have to be careful in terms of what we wish for China. Nobody likes
but all the corruption, how do you get rid of that unless you create a freer system?
Ultimately, you've got to address a lot of what Jim calls these horrific frictions in the system, not just corruption, but income inequality, the environmental and pollution issues. Yep. There are some certainly some credit issues. There are bubbles that appear from time to time in various markets. All of that needs to be addressed. But what the Chinese excel at is thinking strategically as opposed to thinking reactively as we do here. So they lay out a 5-year plan. It may not be perfect. The first 4 or 5 year plans were terrible. But they think about strategy and they make basic decisions aimed at implementing large strategic shifts in this supertanker of economy. And they've got a plan in place right now that certainly identifies a lot of the issues that Jim and I are just talking about, the consumption issue, and we can debate as to whether or not that plan is working, needs to be changed, but at least they got a plan. What's our plan?
All right, the last time Jim Chanos was on the set, the U.S. was headed for a fiscal cliff, and there was rioting on the streets of Spain and Greece. Today, forced budget cuts known as the sequester, they lie ahead. Italian elections are up in the air, and the big short versus long stock story on Herbalife has boiled up. Jim, so good to have you here. Lots to talk about yet again. Let's start with the U.S. and the sequester. I know that you've been a big critic of a lot of the debt that we've accumulated, but let's turn to the sequester. What do you think this is going to do? Do you think that it's really going to shave a significant portion off of our GDP? Are you concerned?
Well, the stock market doesn't seem too concerned about it. Let's put it that way. I mean, we're rocketing higher here, despite the concerns of sequester. If I had to bet it, I think something's going to happen in terms of the sequester. It will go into effect. I think that right now the White House feels it has more to gain on this. I don't know if that calculus is right politically. So I think that they're going to try to paint the Republicans in a corner on this. Whether it'll have an impact on the economy, I have no idea. It's a small number. It is, however, going to disproportionately affect certain industries, and I think that's going to be interesting to see what the political and the lobbying backlash on that is. You know, I've joked sort of for a while now, the biggest welfare queens in the United States sit in corporate boardrooms, not in the ghetto. And I think that as more and more companies realize their top line is going to be hit by reduced government spending, I think you're going to see the flight of the lobbyists to Washington like you've never seen before.
Okay, so the corporations will eventually pressure Capitol Hill.
Exactly. I pointed recently to the durable medical equipment guys who suddenly realized that with competitive bidding under the new healthcare rules, that their reimbursement was in effect going to be hit by about 50%. And they have just flooded Washington and Capitol Hill to try to get that rescinded from the Obamacare. So again, this is what we see. Be careful what you wish for in one side or the other, because one person's budget cut is another person's revenue cut.
Let's look overseas for a moment. Italy, elections there obviously being a bit of a surprise. Do you think Europe and the debt crisis going on there is going to continue to haunt us through 2013?
I mean, we said a year ago in Europe, and we're not political experts on Europe, Trish, but we said that I thought that the argument had moved from the financial world to the political world. I still believe that. I think that Monti has basically put a bit of a monetary safety net under Europe, but the political issues haven't gone away. And the euro is again bringing forth all the things it was supposed to basically put away for good. Regional factions, you know, the rise of extremism, and all these sorts of things that came out of the 30s that we worked hard to put away forever in Europe have come back. And I think that's the real story of the euro. It's not whether you know, the bond buying by the ECB is going to go on, but really, what is the political future of some of these countries? Fundamentals
there. Let's go to Herbalife for a moment. You are a well-known short. What's your take on how the Herbalife saga, if you will, is playing out?
Well, we don't have a dog in that hunt right now,
That's
Trish.
probably a good thing.
But let's just say this. I'm a pretty big skeptic of the multi-level marketing model. I think any business that's dependent ultimately on pulling the wool over your customers, whether it's the distributors who take on more product they can sell, or the customers who are being sold product at 2 to 3 times what it's available for down the street, I think is an unstable long-term business model that I wouldn't want to invest in. Whether you want to short it or not is another issue, but I think that, again, when you're in the business of in effect, of fooling your customers and your sales force, you don't have a really sustainable long-term business.
Should it be illegal?
Well, it depends on what you disclose, and I mean, can you sell overpriced products to people? Sure. Would I want to invest in that as a business? No.
Sounds like you're on Team Ackman. I know, you're not taking sides, but an interesting story nonetheless. Your final thought on sort of overall direction right now for the U.S. economy. Do you feel like we're getting any more
We've said
to the upside?
You know, you heard me debate Steve on China, and yeah, I think China's economic model is completely unsustainable. It may go on for a while, but it's unsustainable. I think more and more observers see that. Europe has the political mess, and the U.S. is the best house in a bad neighborhood. We're still better than the rest.
We're still looking good. Jim Chanos, a pleasure to have you here. Thank you very much.